Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike McAra. He's a cyber currency expert. He works for SunshineProfits.com. Welcome back to the show, Mike.
Thanks, Jim. Thanks for having me. I'm very glad to be back.
Bitcoin appears to be on the verge of a big decision maker for some people. Can you maybe explain what this big point in time is and why it's so important?
Okay, so to explain this, first we need a little bit of background as to how the transaction system in Bitcoin works. And the main thing is that whenever you make a Bitcoin transaction, you update a shared ledger, a ledger that is public and that it shows all the transaction history. And this is the way in which we can confirm all the transactions and the fact that, wealth is transferred from one party to another. And a very important part of this ecosystem are miners. Miners are basically entities that rent their CPU processing power to confirm these transactions, and they get bitcoins in reward. So essentially, the confirmation of transactions and essentially the whole Bitcoin history, it very much depends on the miners. So whenever there are sort of contentious transactions, that there are two versions of the ledger, one showing that transaction X occurred and the other one that it didn't, then it is the majority of miners that eventually decides which version of the ledger to back up. And the second part of the equation is that for some time now, several months, the Bitcoin network has been running at full capacity. And by that I mean that it is basically processing the maximum number of transactions that it can at the moment. This is mainly for technical reasons, linked to the fact that Bitcoin transactions are confirmed in blocks. And right now, these blocks can be of a size that is maximum 1 megabyte. And the matter of fact is that they are getting clogged. So the information used to confirm the transactions, the whole transaction data, they currently completely clog the network, or it happens most of the time. So transaction confirmation times go up, and sometimes it even takes up to an hour to confirm a Bitcoin transaction. This is not a good situation for the development of Bitcoin, because obviously main use case is that people can transfer wealth and their money from one party to another. And when this can't be done quickly and efficiently, customers are not satisfied, and Bitcoin users are definitely not satisfied, and they might want to switch to different cryptocurrencies. So the whole Bitcoin community is concerned how to improve this situation, and there are basically two ways to proceed forward. The first one is to increase the block size, which would mean that, for instance, instead of 1 megabyte blocks, we would have 2, 3, 4, 10 megabyte blocks, and this would immediately increase the network capacity. So one side of the Bitcoin community throw their weight in, and they support this sort of solution, while other entities are not necessarily convinced that this is the best way to go forward, and this is for sort of obscure reasons, but connected to how Bitcoin is set up technologically. First of all, increasing the size of the block, it would immediately increase the size of the Bitcoin ledger. And the argument here is that this could serve as a technological disincentive for people to join the Bitcoin network, for people to store the ledger on their workstations, on their PCs. So there is this idea that whenever we increase the block size, Bitcoin might become increasingly prohibitive for new entrants, and especially for new entities wanting to operate in the Bitcoin space. Not necessarily for users, but this is also part of the equation. So right now, we're at the moment when the situation has gone so bad that we definitely need to see a resolution. And the way the Bitcoin ecosystem works, we don't have any central authority. So necessarily, everything has to be done by means of consensus. And generally, right now, it is pretty unlikely that we will see a lasting proposal that will be backed by the majority. Situation changes from day to day, because only 2 weeks ago it seemed that we would be able to proceed forward, but right now it's a bit more murky. And actually, today we are seeing something that is called the hard fork, which means that part of the miners in the Bitcoin community, they decided to support sort of one fork of a Bitcoin ledger, and another part, they decided to support a different part, a different fork of the Bitcoin ledger. And the main difference here is that these forks are based on different technological solutions. One is sort of very conservative, they don't want to increase the block size, while the other is not. And this might result in two versions of Bitcoin going into the future. And is this a big deal? Well, not necessarily, because as history shows, Bitcoin's forks might result in one of the forks being eventually not backed up sufficiently by miners and users and effectively functioning, but on a very small scale. So right now it seems unlikely that the current fork will result in a Bitcoin version that is going to be supported by majority of users. Most probably this version will gain some support, but then it might drop off and people might want to stick with the sort of base version. And the real way to move forward would be to alter the base version. But as I said, this is very hard to do, because it would have to be a consensus vote, and maybe it wouldn't have to be unanimous among miners, but you would certainly have to see a lot of mining power being behind that proposal, which doesn't seem to be the case right now. So right now, it doesn't seem that the fork is such a big deal, but if we don't see a resolution of the current problem with the capacity of the network, we might see more forks in the future, and some of them might catch on.
We'll have more with Mike McAra right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Mike McAra. Mike, I can see one reason why people would like to see the larger blocks. It would increase the speed that transactions take place. In other words, right now, using Bitcoin as everyday currency to go out and buy a loaf of bread and some milk seems pretty impractical if you have to wait an hour to get that transaction put through. Or do people have to be forced into upgrading their computer systems so they can run at higher speed? But again, all it takes is one slow computer and the whole works to slow everybody down.
Okay, so as I mentioned, the argument that is against increasing the block size, it's a little bit subtle than the one that's for, and it has been discussed in the community. Basically, it's been trashed out for months now. The easiest way and sort of the most intuitive way would be to increase the block size, and then, as you said, it all scales up. So people who are opposed to that, they make an argument, for instance, that increasing the block size, it would increase the size of the ledger, and it would also make it technically more challenging for various companies who enter the Bitcoin space and need to have the hardware to either confirm transactions, to develop side chains, or develop various overlays over the Bitcoin protocol. It's argued that this change, it would make it harder for them to enter the Bitcoin space, because right now it's basically that everybody can write something for Bitcoin. Everybody can test either their own cryptocurrency or their own extensions to the system. There are really no barriers to entry other than your skills. The argument is that increasing the block size, this might change that. So it could theoretically result in a more concentrated Bitcoin ecosystem. And by that I mean that it might be the case. It doesn't have to be, but people make this argument that there might emerge entities that they will necessarily gain more power, and that it will become significantly harder for people working from their garage or the dorm room, or just single talented programmers to enter the space and to come up with something innovative. And the way I understand the opposing side of the argument is that this is what they are afraid of. And it's a valid point to an extent, but even more importantly, they propose ways to circumvent increasing blocks. And one of the proposed ways forward is called segregated witness. And what this does, it doesn't increase the block size, but it changes the way transactions are confirmed. So right now, when a transaction is confirmed in a block, you have the party that's sending the money, the party that's receiving them, and you also have in the middle a pretty lengthy signature. And it is this signature that constitutes most of the size of the block. So the idea is to move this signature outside of the block, and by that you only have the person sending the money and the person receiving the money in the block, and the signature, it would be extraneous. So it wouldn't necessarily show up in the block itself. It would be stored outside of it, and this could basically enable us to pack more transactions into one Bitcoin block. It's been proposed. It might be a way to go forward, at least temporarily. Bitcoin miners seem to be inclined to accept this, but nothing certain as far as that is concerned. But it also raises security issues. So the main solution that the opponents of increasing the block size propose, it has some security issues, because immediately you see that if the signature is not on the public ledger, then how do you verify it? And there are ways to ensure this, but it gets a bit technical, and basically it makes the network, this little bit less safer. So it might be a counter argument, but in my opinion, it might be really hard to go forward without increasing the block size. So probably a best solution for now would be to implement segregated witness and see how this is going forward. If it helps or not, then you might want to raise the block size, but it seems pretty much inevitable that you will have to have the block size increased in a matter of, if not months, then a year or maybe 2 years at most.
We'll have more with Mike McAra right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike McAra. Mike, what about other security issues surrounding Bitcoin? The U.S. really wants to find out if it's being used for money laundering. Apparently, an arrest has been made in Greece, a person accused of money laundering there. How secure is Bitcoin, and are people as anonymous as they might believe they are?
Okay, so break this down. If you're using a respectable exchange, and in particular an exchange that is subject to your local anti-money laundering laws, you might consider Bitcoin relatively safe. So, for example, if you're a US-based customer and you're using Coinbase or any other US-based exchange that adheres to US laws, then generally using Bitcoin is it's not dangerous. I would actually say that it's pretty safe. On the other end of the spectrum, if you're using Bitcoin via foreign exchange, in particular an exchange where you're not really quite sure where it's based, what kind of jurisdiction it falls in, and what kind of laws apply to it, then transferring money through this exchange, it might be risky. So the basic answer to that would be that you always have to consider this in conjunction with what kind of exchange you're using. And to give an example, and the one you mentioned, the U.S. Treasury Department with other U.S. agencies, it's asked Greek authorities to arrest a foreign national called Alexander Vinnik, and they allege that he is the operator behind a pretty popular BTCE exchange. So BTCE, it is or it was an exchange that in its heyday, it was one of the most popular Bitcoin exchanges out there. Following the Mt. Gox debacle and in recent years, it sort of decreased in popularity and it doesn't crop up on the list of major exchanges anymore. But nevertheless, it is an exchange with a lot of history, and the one that you wouldn't necessarily consider very obscure only by reading about it in news pieces. Then again, if you do your due diligence, then it turns out that BTC it's not really open where it's based and who's behind it, what kind of laws are applicable here. And as it turns out, that the person that is alleged to be the operator of BTCE is likely to be charged with money laundering and possibly other crimes. And maybe even more shockingly, it's turned out that he might have played a part in distributing the funds stolen from the Mt. Gox exchange, which went bankrupt in 2014. So, as it now seems, the whole exchange might have been just a cover for a money laundering operation, or it might have had a money laundering operation running in parallel to its main activities. One way or another, this is a very bad situation for anyone who deposited funds with BTCE, because right now the U.S. authorities they want to fine the exchange for what was it, $110 million US, and where is this going to come from? They probably are going to see the assets of the exchange if they haven't done so already, because FBI agents were in the data centers of the exchange, and it's a really sour situation, because it might be the case that people who are using BTC for completely legitimate reasons, their funds are blocked and they are not sure that they will see them again. So whenever you're considering buying cryptocurrency via an exchange, which is probably the easiest way, you should always check if this exchange is regulated in your jurisdiction, check its history, if it's transparent, basically do all your due diligence, and only afterwards commit your funds, just the same way you wouldn't necessarily transfer money to a brokerage firm. You don't know where it's based or what kind of laws are applicable to it. The same applies to Bitcoin exchanges. Do your own diligence, make sure that it's regulated in your jurisdictions, check if it hasn't had any history of running into trouble with the government agencies, and only afterwards consider actually using it for trading Bitcoin.
Mike, always educational when we chat with you.
Thank you.
My guest has been Mike McAra, cybercurrency expert from SunshineProfits.com. He was speaking to us from Warsaw, Poland. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet, our YouTube channel, Talk Digital Network. Questions for the show or for our interesting guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.